A tariff storm gathers as the United States ups the ante on auto imports. The global automotive industry braces for impact. In April 2025, the Trump administration announced a 25% import duty on vehicles and crucial auto parts, aiming to protect American jobs and supply chains. This bold move was part of a broader strategy to bolster domestic manufacturing. This move, affecting engines, transmissions, and more, reshaped cost dynamics for car makers in the U.S. Automakers now face the challenge of adjusting their supply chains and production costs. The tariffs, valued at $475 billion in 2024, targeted key partners like Mexico, Japan, and Canada. These countries, integral to the global automotive supply chain, were now at a crossroads. Officials argued it was necessary to revitalize the domestic auto sector and reduce foreign reliance. They believed this would lead to a resurgence in American manufacturing and job creation. Critics warned of retaliatory actions, increased consumer prices, and potential damage to global supply chains. They feared that the tariffs could backfire, leading to higher costs for consumers and strained international relations. The automotive industry, reliant on international supply chains, faced significant disruptions. Companies had to navigate a complex web of logistics and supply chain management to mitigate the impact. The question loomed: would trading partners absorb costs, pass them to consumers, or retaliate, sparking trade wars? Economists and industry experts debated the potential outcomes and long-term effects. The stage was set for uncertainty and strategic realignment. Businesses and governments alike had to rethink their strategies and prepare for a new era of trade dynamics. The global automotive landscape was on the brink of transformation. As the world watched, the industry prepared for a future shaped by new policies and shifting economic forces. Canada's retort: a bold pivot from Washington to Beijing. This strategic shift was not just a reaction, but a calculated move to secure its economic future. In response to U.S. tariffs, Canada announced a shift in trade policy, reducing reliance on the U.S. This decision was driven by the need to protect Canadian industries from unpredictable U.S. trade practices. By May 2025, Canada had signed a comprehensive trade agreement with China, diversifying its economic interests. This agreement opened new markets for Canadian goods and services, ensuring a more balanced trade portfolio. This strategic move aimed to safeguard Canada's economic sovereignty and the future of its automotive sector. The automotive industry, a cornerstone of Canada's economy, stood to benefit significantly from this diversification. The Canada-US Auto Pact, once a symbol of integration, faced disruption due to US protectionism. This disruption threatened the stability of the Canadian automotive sector, making the pivot to China even more crucial. The pivot to China was seen as a pragmatic choice in an unpredictable trade environment. It was a move that reflected Canada's adaptability and foresight in navigating global trade challenges. Despite the U.S. being Canada's largest trading partner, the risks of inaction outweighed those of diversification. The new trade agreement with China provided a safety net against potential economic downturns. Canada's swift response highlighted concerns about U.S. trade policy and a resolve to chart an independent course. This move was a testament to Canada's commitment to protecting its national interests. The decision marked a potential reordering of North American economic allegiances. It signaled a shift in the balance of power and influence within the region. Canada's move signaled a shift in global trade dynamics. It was a bold statement of intent, showcasing Canada's willingness to embrace new opportunities and redefine its place in the global economy. The Dragon and the Maple Leaf, unpacking the new Sino-Canadian Accord. The Canada-China Trade Agreement, announced in May 2025, extends beyond automotive concerns, covering energy, AI, and digital infrastructure. This comprehensive pact aims to build a multifaceted economic partnership, moving beyond a simple response to U.S. protectionism. The agreement represents a significant recalibration of Canada's foreign and economic policy. Detroit's disquiet American auto giants face an unsettled road. The once seamless operations between the U.S. and Canada are now fraught with uncertainty and challenges. Canada's pivot to China, spurred by U.S. tariffs, sent tremors through the American auto industry. This shift has forced companies to rethink their supply chains and partnerships. U.S. automakers reliant on cross-border operations with Canada faced increased costs and supply chain disruptions. The intricate web of manufacturing and assembly has been significantly impacted. Parts and vehicles that once moved freely now encountered barriers, forcing companies to reevaluate strategies. The delays and increased costs are causing significant operational headaches. The integrated North American auto industry faced efficiency challenges due to tariffs. The once smooth and efficient production lines are now facing bottlenecks and delays. U.S. automakers lobbied for preferential tariffs for Canada and Mexico, but Canada's move complicated efforts. The political landscape has become a maze of negotiations and lobbying. The landscape shifted rapidly, with companies navigating a fractured trade environment. The need for agility and quick decision-making has never been more critical. Long-term viability of production facilities in the U.S. and Canada came into question. Companies are now evaluating the sustainability of their current operations. Dodge's decision to drop a Canadian-made EV trim indicated shifting production strategies. This move highlights the broader trend of rethinking manufacturing locations. The Big Three in Detroit faced urgent strategic reviews to adapt to new risks. The pressure is on to find innovative solutions to these unprecedented challenges. The industry braced for a rapidly changing geopolitical and economic chessboard. The future remains uncertain, but the resilience and adaptability of these auto giants will be put to the test. Shifting gears globally, the new contours of international auto trade. Canada's pivot to China and U.S. tariffs sent ripples across the global automotive trade system. Established patterns of supply, manufacturing, and sales faced fundamental challenges. Nations and corporations reassessed strategies and alliances, reshaping competition. Japanese automakers anticipated an $11 billion loss due to U.S. tariffs, seeking government stimulus. The European Union prepared retaliatory tariffs, highlighting high stakes. U.S. tariffs impacted global automakers differently, with Tesla less affected due to its manufacturing presence in China. Trade turbulence accelerated manufacturing decisions influenced by geopolitical considerations. Mexico became a key location for companies navigating U.S. tariffs despite challenges. The global automotive map was redrawn by politicians and trade negotiators. The industry faced a fragmented and uncertain future. The world navigated a new era of automotive trade dynamics. The Eastern Ascent. China's automotive ambitions gain traction. U.S. protectionism and Canada's realignment with China bolstered China's automotive sector. U.S. tariffs made Western automakers less competitive, opening opportunities for Chinese companies. China's dominance in electric vehicle manufacturing and battery production strengthened its global position. The Canada-China Trade Pact enhanced China's capabilities in connected and autonomous vehicles. Chinese automakers faced challenges in the U.S. market but gained ground elsewhere. The U.S. planned to ban Chinese-made connected vehicle hardware, impacting Chinese ambitions. Despite hurdles, China's ties with Canada and manufacturing might position it as a global automotive player. The global automotive order shifted with China gaining influence. The driver's dilemma: what this means for car buyers and choice. U.S. tariffs and Canada's pivot to China impacted car prices and availability for consumers. Tariffs increased production costs, leading to higher car prices in the U.S. and Canada. Consumers faced reduced availability and fewer choices due to disrupted supply chains. Niche vehicles and models with complex sourcing faced challenges in affected markets. Broader inflationary pressures further squeezed household budgets, complicating car purchases. The dream of affordable personal transport faced new economic headwinds. Adapting to disruption: how the automotive sector is reacting. The automotive industry scrambled to adapt to trade volatility, exploring strategies to mitigate impacts. Companies reevaluated sourcing, localizing production within favorable trade blocs. Dodge's decision to drop a Canadian-made EV trim indicated production consolidation. Honda adopted a cautious approach, hoping for trade tension de-escalation. Auto parts suppliers faced challenges, seeking new markets or production facilities. The supply chain aimed for resilience, reducing dependence on volatile trade routes. The industry innovated in products and operations to navigate the new trade landscape. Beyond borders and bonnets, the wider economic and geopolitical tremors. U.S. tariffs and Canada's pivot to China signaled profound geopolitical and economic shifts. The reordering of international alliances and economic dependencies reshaped global dynamics. Canada's economic pact with China illustrated evolving dynamics and potential Western bloc weakening. The U.S. and China agreed to a temporary trade truce, highlighting fragile détente. U.S. economic output rebounded, but tariffs pushed prices higher, causing supply chain issues. The Trump administration faced legal challenges over tariff policies, adding complexity. The trade realignment underscored a global contest for economic influence and technological supremacy. Nations diversified partnerships, redrawing the global economic map. The automotive industry served as a key battleground in the new global order.